starting with the performance snapshot, it looks like this investor is doing a pretty good job. But now let's actually take a look at the stock picking and the path it took to get this advantage over the market. So let's just jump down to stock picking, and what we actually find is that most of the time this portfolio was lagging the S&P. So at the very end we see beating the S&P, but 5 of those 7 years it was actually a loss. Let's dig into why. So if we look at how long the specific stocks chosen in this portfolio outperform the market, what we see immediately and really interestingly is that around 6 months is just around the peak of when most of the stocks are actually beating the S&P. But as the stocks were held longer, we actually see a decay, and they're on par with the S&P around 8 months. Now, after a year, strongly underperforming the S&P, and after 24 months, massively. Now, this portfolio, the average holding period was around 390 days. So the temporary alpha disappeared, stock after stock, just giving money back. And so the goal here for investors is to be aware of their own investing patterns and to be able to diagnose them. Ultimately, the goal is to be a stronger investor who's more effective and more confident. And that's exactly what we do at Prof of Wall Street. If you want to get a portfolio snapshot, let's take a look at what the snapshot is. What it does, it provides you with an initial analysis of all the major pillars of investing. And it tells you with dollar numbers or percent numbers the impact on your overall performance. So I recommend that you get your free initial snapshot, and then if it makes sense, get a report done. So again, this has been Dr. Amos Nadler, and this is a report. Talk to you soon.